At this time, I'm delighted to welcome our next presenter to the stage. Aina Rosputnia is a stock and futures trader and author of the book Basic Instinct of Trader. She's also the CEO of Managed Accounts IR.com, a finance expert and an analyst who writes for Benzinga, Equities.com, The Businesswoman Media, Investing.com, and others. Aina, can you hear us okay?
Yes, I can hear. Thank you.
Fantastic. Well, we're delighted to welcome you to the stage, and we're ready when you are.
I am ready. I want to thank you everyone for coming to see my today's presentation, Best Assets to Beat S&P 500 Returns. And I believe this presentation will be useful for many of you. Also, at the end of this presentation, we will have a few minutes to answer questions, if any. So today, I would like to start this presentation with my favorite quote. Discovery consists of seeing of what everybody's seen and thinking what nobody had thought. And these words became a kind of guidance for me in trading because it's so true. We use almost the same data that everyone is using, but there is a way to become better in trading and investing. So what do we need to beat the market? What asset do we need? What tools do we need? First of all, we need a market that is driven by true supply and demand to be able to focus the next trend and the price move. You will understand a bit later what I mean by real supply and demand. Also, we have to pay special attention to broad diversification opportunities beyond the traditional asset classes. We want to increase our returns and decrease the risk, which is very important, as well as reducing the volatility. In fact, volatility creates a money-making opportunity, but not each investor can handle a very big volatility, and that is the main problem. Opportunity to profit in a variety of economic environments, which includes a stock market decline, recessions, and some uncertainty in the world, which became almost a part of trading routine for many traders. Also, we want strong performance during stock market declines, and also we need a transparent and liquid asset. So what asset class could it be? And I believe the best asset class that fits this description is agriculture sector and agriculture futures. So when I started this presentation, I meant that this asset class is driven by supply and demand. And what makes it different from the stocks? The supply and demand in stocks are more driven by emotions like fear or hope that company will perform well in future. The supply and demand in agriculture futures is absolutely different, and it's so-called true supply and demand because the real seller wants to sell his futures, his product, sorry, not the futures, his products, and the real buyer wants to buy it. That's why we have real supply and demand. And also, agriculture futures is a kind of thin market, and most of the traders believe it's not very good market to be engaged into, and it can be a kind of risky market, but the reality is a bit different. Yes, it's thin market, but over 80% of all money in this market are controlled by so-called commercials. In other words, real buyers and producers of this commodity. And they know this market in details because it's their business. So we want to look for what they are doing and to do the same because they are the main players in this market. Moreover, this market has a very good seasonal tendencies and they are very cyclical. So, so how can we get an idea what commercials or real producers and users are doing in this market? We can use absolutely free data, which is available on CFTC website and called Commitment of Trader Report. As a big players, they have over 100 contracts and they have to report their positions. So we can see what they are doing and use other tools to get better understanding what to expect next in agriculture commodities. There is also commitment of trader report for other types of commodities, including oil, gold, and others, but it's not so reliable because, you know, oil and gold nowadays became not just commodity, it's a kind of sometimes money, sometimes just a pawn in the political games and so on. That's why the winning rate when it comes to commitment of trader report is the best in agriculture sector. Thinner market, but better returns and more clear analysis of real supply and demand, and easier for us as a result to forecast the price. So here I want to show you the example of what can we get from that commitment of trader reports. And on this chart, you can see the commercials positions index. In other words, this indicator shows how bearish or bullish commercials are compared to their positions half a year ago. So when this indicator reaches above 75%, it's considered to be bullish setup. When below 25, bearish. So we have few examples on this chart and we can look it one by one. So the first setup is right here, as you can see, and we had a readings below 25. The market topped and start to decline. This is weekly chart, by the way, and we use commitment of trader report on the weekly basis because it's updated once a week. The next, we saw another readings below 25% and another decline. The next setup is a bullish one because we have readings over 75% and the rally goes. Again, the opposite, readings below 25%, down market goes. Again, above 75, up it goes. The opposite, below 25, and we see a downtrend in this market. Not a downtrend exactly, but quite significant decline because, as I mentioned, it's a weekly chart, so you could make a nice profits here. Again, above 75% and rally comes. Below 25, the decline starts. And it's not the only way to use commitment of trader report. Let me show you. On this chart, we can see the net positions of different market participants, including commercials, big funds, and retailers. In fact, I don't pay much attention to funds and retailers, but commercials are very important to me. So when it comes to net positions, you don't have to bother yourself and look for all the ups and downs on the chart or in their positions if you are not using indicator and just follow the data on CFTC website. What we are really interested here is to find extreme readings. Extremely high, like the highest since the year, the half of the year or 2 years, or the lowest readings. So extremes are very important because it's what creates the fundamental setup for market to rally or decline. It's like the cause for trend to happen, and technical analysis is just a timing tool to start your position and to enter the market. But we will never get significant trend within agriculture sector without commercials being involved. So keep that in mind. So let's have a look. Here we had a first extremely high readings in their net positions and market bottomed and started to rally. Again, it's a weekly chart as well. Keep that in mind. Another extreme readings and another bottom in the market with another rally. Again, sometime later, it was quite a long time, almost a year, we didn't get any setup in this market. It's a wheat market. Finally, we got new highs, new extreme readings, and market started to rally until their positions reached the lowest since quite a long time, more than a year, and market started to decline almost immediately. Again, another low in their net positions, another extreme low, and we see market started to decline. So that's the key, and that's what makes this market to move to the upside or to the downside. Why that is so important? Because in agriculture sector, commercials own over 80% of all money. So keep that in mind. It's impossible to fight them or to play the opposite side. Sometimes it takes longer time for them to accumulate or distribute their positions. And we will talk about it a bit later. But anyway, when they are set up for rally or decline, sooner or later it will happen. And it's better to look for opportunities to trade market their direction. As I mentioned, timing is the key. They have a lot of money and they are not speculators. They are not looking to make money buying or selling some futures. They need commodity for their further production, for example, or they own this commodity, they're farmers and want to sell it. But as I said, they know this market in a very detail. So that's why we want to look for what they are doing. But timing is important for us as speculators. So how do we find the better timing to join commercials in their play? We can time our positions with cycles, seasonals, or professional accumulation. It helps us to narrow the time into a few weeks and in some situations, even a few days. So let's have a look at it. Here I have the chart with our professional accumulation and public accumulation. You can use any kind of indicator to see it, even the free indicator like unbalanced volume, it's still working. I know it's an old school stuff, but old school is still there and it still works. So we had a lower low in the price, but the accumulation didn't follow it, which means there is a professional accumulation in this market and we can expect the rally. And that is exactly what happened. And if at the same time we saw on a weekly chart that their net positions reached extreme level, for example, we can wait for significant rally and take buy signals in the market. The next chart shows a seasonal tendency of the market. The most seasonal market among agriculture sector is in fact grains. It doesn't mean that it follows each ups and downs based on the seasonal forecast, but still it plays very well, especially if we see that the market is stronger than the seasonal forecast is. It's exactly what we see here. The market here is higher than it should be based on the seasonal forecast. Like we have the timing of potential bottom in the market, which should be lower than this low. But in fact, this market trades higher. So we can conclude that the market is stronger than the seasonal tendency. And that's why we can trust this seasonal low and buy. Once again, only in the case if we see that commercials are on the long side and they have an aggressive longs in the market. We don't want to make any conclusions beside their positions. We always want to look for what they are doing because they are the main power in agriculture sector. We are not talking here about gold, crude oil, and so on, because those kind of commodities have its own specific and we are not covering it today. So, do you want more proof that agriculture sector can easily beat the stock market? I have an official data about managed futures industry who are actively trading agriculture sector over the past 35 years. So during the 5 worst period declines for the stocks since 1987, managed futures were positive. They were positive 75% of the time during the 15 worst quarters for the stock over the past 25 years. During the most critical events over the past 35 years, managed futures substantially outperformed the stocks. Over the past 25 years, portfolio diversified at least 20% with managed futures performed 62% better than a portfolio with just stocks and bonds. And finally, managed futures outperformed stocks by 46% and international stocks by 192% over the past 35 years. What I'm trying to say is, you see, it's a data stats, and I like to use it in different kinds of stats in my trading and in my analysis. It proves that the big players, professional money managers, they're paying close attention to agriculture sector because it gives quite a good returns, and they are more easy to forecast and so on. And as you can see, it has been proven by 25-35 years that those who are trading agriculture sector, or at least who have diversified with this sector, have much better returns over the long term. I know that everyone are too focused on NASDAQ, innovations, and so on, but over the long term, the agriculture sector and those traders will outperform any innovations, because innovations are good when everything is good. But when something goes wrong, when we enter the turbulent times, the situation changes very quickly. And sometimes we are just unable to hear that warning signs that market sends to us. So let's summarize. The effective asset allocation is the key to long-term and consistent returns. I'm not saying that trading agriculture, you will never face any kind of drawdowns and so on. It's still there, but in general, the returns are much higher, the risks are much lower, and it's driven by true supply and demand, and it says much because we can see that supply and demand. We can measure it following commercial positions, using cyclical analysis, using seasonal forecast and professional accumulation. Moreover, there is much more tools we can add to mentioned by me tools and filter even more trades to get the highest possible winning rate and to reduce the risks as well. So, as I said at the beginning of this presentation, old school still works and it wins over long term. Maybe some year we will see innovations are giving a better return, but not always. In most cases, we see that year by year, traders who trade agriculture sector outperform stock market traders. And I believe we will see more to come, and this dynamic will keep moving in this direction as well. So we have left a few minutes for the questions, if any.
Yes, we do. Any specific ETFs and stocks that you like to invest in?
Once again, please.
Is there any specific stocks or ETFs that you like to invest in?
At the moment, no, but regarding stocks, I can give you a tip. At the second half of this year, the middle term and the long term cycles come together at the same time, indicating potential bottom in the stock market. And if key economic factors and indicators remain positive, like unemployment, credit cards payouts, and business environment and so on, then we can expect a very nice buying opportunity to come in the stock market. And first of all, I will be focused on Dow Jones stocks because as for me, we are approaching some very turbulent times, and I think that innovations are too risky at the moment. So I will try to find some more old companies, old American companies with a lot of history, a lot of data I can analyze to see how they came over recessions and so on. But if at the second half of this year, we will see the key economic indicators turning to the downside, then potentially I will ignore this buying opportunity at all, or will engage only on a short-term basis. So a lot depends on what will happen this summer with economic indicators.
Excellent. Can you describe your fee structure for managed accounts?
Well, actually, it's based on the performance only. I don't charge any management fee and so on. And it depends on the account size. So you can reach me to get details.
Excellent. Okay, so is there a subsector, so to speak, of organic agriculture?
Once again, please.
Is there a subsector to speak for organic agriculture?
I like to analyze the general picture of the agriculture sector and then look for what commercials are doing. I'm not trying to predict the price much in advance. If we pay attention to cyclical analysis, we will see a bullish years. The next 3 years are bullish in the agriculture sector. But the cyclical analysis is not enough for me, no matter if it's an agriculture sector or any other market. I want something more to be on my side. And first of all, when it comes to agriculture sector, I watch commercials. And I like the markets where they are the most active and the most, if I may say so, trustable, especially grains, meats, and so on.
Excellent. Well, thank you so much. That's all the questions we have for today and all the time. I want to thank you very much for a wonderful presentation. We really appreciate your time.
Thank you. It was a pleasure to be here.
Fantastic. Have a wonderful day.
You too. Bye.